Welcome to Forex Fridays. Let me share my screen very quickly. I hope all of you can see my screen. And once again, welcome. What we are going to discuss today is basically economic information or data that traders primarily use when it comes to setting up their trading day or their trading week. So make no mistake, this is not an economics class. So if you have never had any concept to do with economics or ever gone to an economics class, don't you worry, because this is not one of those classes. It's basically the information that you ought to know or you ought to have at the back of your mind before you set out your trading week or trading day or session, whatever time period that you choose to trade. So before I proceed, or before we go any further, very important for you guys to take note of this risk disclaimer. So I'm going to give you guys a few seconds to just read it very quickly, or I'll just run through it very quickly. So all information that will be presented here is for educational and informational purposes, and it is not professional investment advice. And if you act on any information, that basically means you'll be doing it at your own risk. The disclaimer, though, doesn't mean it's wrong information, but for the purposes of investing, can seek more advice from your own investment advisor. Okay, even if you yourself, you're your own investment advisor. Okay, so the Forex market, basically keeping in mind when it comes to things to do with economics for traders, what you're simply trying to do using this data is anticipating coming movements. And in FX, for instance, we talk about exchange rates, currencies. So this information simply helps you anticipate whether there'll be a change in currency or in Forex exchange rates once the economic data is released. So it is very important to have that at the back of your mind, because some of this information might affect exchange rates for a shorter period of time, a longer period of time, and other kind of information that comes out there and tends to affect the economy will also affect exchange rate movements for maybe periods of like one whole business quarter, 2 business quarters. For instance, at the moment, what is the prevailing narrative out there that everyone is keeping an eye on, including economists and traders? For instance, the spread of COVID-19, and particularly the Delta variant of the coronavirus. We even saw this week the stock market being volatile, tanking, and some currencies gaining strength. For instance, the dollar, which is regarded as a safe haven because of that prevailing macro landscape, which has been as a consequence of COVID-19 and specifically the Delta variant. So we're going to look at several bits of data which you should focus on in order to determine the trading environment, as I said earlier. And this trading environment can be for the week, for the day, or even hours, and also months and years too. So it will be very, very insightful to know them, to know the data releases, economic data releases that are lined up, so that you can be able to anticipate how a tradable asset will react to changes in that data, or what kind of data is the market paying attention to, market participants are paying attention to. So you have to put all the vital economic indicators. So basically we'll discuss principally, I'll highlight on vital economic indicators. Come up with a model that will enable you to understand the trading environment. And you have to categorize the data depending on significance. That is very, very important, guys, because every day, data in economic reports are being released. Some of them, surprisingly not meeting expectations, some of them meeting expectations. And this data if you categorize it depending on significance. And the best way to know that which data is probably going to be significant is to understand what the central banks are looking at. Okay, so in fact, one of the releases, usually, especially those are released this week, yesterday, the interest rate release data came out yesterday. That is specifically for the European Central Bank. Yesterday, we had the European Central Bank Monetary Policy Committee meeting. So it was an important event day on the economic calendar. And it is through such events whereby central banks will reveal the economic data indicators that will be significant to market participants. So if you are new to trading, or if you have been trading for quite some time and you did not factor this in your market operations, your buying and selling, it is very, very important to take note of that and be able to, get these reports. For instance, the central bank monetary policy statements, go through them, you can read them, you can go through them, and then you will be able to see what are the bankers paying attention to. Remember, they're the biggest participants in this market. So someone raised their hand. I hope it's a question. Maybe they can, if you have questions, guys, remember to put in the question in the chat section, and we'll, get on to those particular questions after we are done with the webinar. So a good trading plan will put all that, all the data indicators in perspective. And so it will form an important piece in your trading plan. Okay, very important to understand that and know that when you are beginning trading, once you open a trading account, obviously. So what I'll try to do, I'll give you guys like a basic framework where you can be able to fit these indicators together. And by no means will this be a be-all and end-all of economic theory. Economic theory is really wide and expansive. We could, go on hours and hours discussing some of those things, but that will be pretty much be sort of like, mental masturbation of some sort. But just go straight on so that you guys can know which data points to pay attention to, even when you're looking at the economic calendar. So, and a very important indicator is labor market indicators. And labor market indicators basically applies across the board when it comes to all exchange rates for various currencies: euro, dollar, Japanese yen, and the sterling pound. Obviously, I'm mentioning the majors. And job creations. And job creation basically is the key to medium-term and long-term economic outlook. So any sign of broader growth will be seen as tentative or suspect unless job growth is present. That is any sign of economic growth. Okay, the signs of an economic growth, but jobs are not being created. So the labor market strength is a positive for any currency because it indicates positive growth going forward. That means many people will be able to work, put more money in their pockets. Putting more money in their pockets, go out there and spend. Factories also will now be able to manufacture and process more because demand will be high. And that will tend to have a positive impact on that particular nation's currency. So important to track down those labor market indicators, write them down, have them down on your plan. When are they going to be released? What are the expectations? And as I said earlier, are market participants focusing on that report or that event release? And I told you guys how to know what the market is significantly paying attention to. Simple central bank statements, monetary policy statements. Don't worry, we will basically find out how to find out where we can get those particular reports or releases. Now, traders can make deductions as to the potential for higher interest rates in the future to curb wage growth inflation. When we're looking, for instance, at labor market indicators, and if you are a trader and you see that, well, because jobs are basically growing, there's job growth, means there's a lot of money in circulation. Interest rates, obviously, that is inflation, it's going to go up. That is money supply is going to go up. And that basically portends higher interest rates in the future. Okay, so higher interest rates usually currencies usually love an environment where interest rates are high. There's a demand for the currency, and you'll be able to tell, not with certainty, of course, but you can be able to anticipate. The keyword here being anticipation. Remember, even when I was starting out this, I did not read this quote out there, but it is very, very important to keep in mind that speculation or trading is nothing more than anticipating coming movements. So you want a framework to help you anticipate. And in your framework, you should have labor market. That is your economic data framework. You should have labor market indicators that help you to do that. So now, the indicators for jobs, we have the most common one known out there, and the market is very sensitive to it, which is the non-farm payrolls. Also the average hourly earnings and the employment rate. Yesterday, we had unemployment claims data released yesterday, and it had a certain significant impact on the market, on price action or on exchange rate. We'll have a look at that. So these three, mark them out, note them: the US monthly non-farm payrolls, unemployment rate, average hourly earnings. And this information is public, it's not hidden, and you can be able to even access it right from your platform. Now, this is an example of a change in payrolls, okay? And you can see the change in payrolls. That is the S&P 500, that is the stock market. A stock market index called the S&P 500 usually tracks, okay, usually tracks job growth. You can see if job growth is increasing. Also, the stock market tends to respond well when job growth starts tanking. The same thing also for the stock market, it tends to react negatively to that. So you can already see how this economic data point is very, very important for those of you who want to trade the stock market or the stock index. Very, very important. And this chart shows it. Okay, so then US non-farm payrolls and volatility in major dollar currency pairs. Now, that employment report, which currencies tend to be more volatile when it is being released? So we have NFP day range, which is day range being greater than the 5-day ATR. ATR here means average true range. It's a measure of volatility. So you can see, for instance, a currency like euro dollar. Okay, the NFP day range is usually greater than its volatility for the last 5 days. That is the last. That is according to the 5-day average true range. Volatility for the last 5 days, euro dollar tends to be affected. 64% volatility climbs up that particular rate. You can see the dollar index 73%. So having such kind of an understanding or of a framework, okay, so that you can be able to anticipate when you are trading Euro USD, when that report is being released, when you're doing your news trading or trading pound USD, doing also your news trading, you see which kind of currencies tends to react to the volatility that is caused by that economic data print or release. Another one, the consumer. So mark these things down. basically indicate labor market report or labor report. Then you have the consumer. Very important to understand the health of the consumer. And effects in the G8 nations, or let me just say in the developed economies, the developed countries, world, the markets and effects particularly will be will be driven a lot by personal consumption, overwhelmingly driven by personal consumption, which accounts for 60 to 70% of overall economic activity. So personal consumption, basically the health of the consumer. Personal consumption, which is also known as private consumption or personal spending. How are people spending their money? Are they spending less? Are they spending more? And what are they spending their money on? Are they spending their money on buying homes? Are they spending their money when it comes to making retail purchases? For instance, like in the summer, what do most people spend their money on during the summer? Holidays, for instance. That's one of the things that people spend their money on, holidays. And what I mean by holiday spending, travel, clothing, shopping, everything. And what does that bode for the currency of a nation which tends to be a tourist, which basically has invested heavily in tourism? Countries which themselves are considered as tourist destinations, not only countries, even cities. And what will that, portend for that particular nation's currency? Will there be more demand for it or less demand for it? Okay. Now, so these are the questions that traders basically aim to answer by tracking consumer surveys. So there are various surveys out there which are consumer surveys, and you can be able to track them and take note of them, record them, put them down, okay? Have a sort of like an Excel sheet or plan, let me just say an Excel sheet or a table, tabulate, see, track consumer surveys and see the health of the consumer, the opinion of the consumers. And once you have that data down systematically, you can be able to tell what is the health of the consumer. Okay, and if consumers are spending a lot, will that have an impact on the money supply, that is on inflation? Will it have an impact on inflation? And what does the central banker think about money supply at the current moment? Will the central banker look to cut interest rates if, let's say, there is excessive money supply, or will the central banker look to, will the central banker look to hike interest rates if there is a lot of money supply, or will the central banker look to cut down on interest rates? And what will this probably have? What impact will these actions probably have on the currency exchange rate? And you can see, basically, we have started from a point of understanding the consumer all the way to inflation. Then again, the central bankers and the kind of decisions they'll make, then how currency exchange rates will be affected. Another important information, data points that you should pay attention to, data points to do with the business sector. Business sector obviously makes up a third of overall economic activity, since they contribute directly to economic activity through capital expenditures, building factories, stores, offices, buying software and telecommunications. Especially now that, many nations have come out of strict lockdowns. Some of them also are pursuing a vaccine technology, and they have vaccines, and things are coming back to life in some parts of of the world, particularly developed countries. Even if there is this large scale over the Delta virus, but overall, manufacturing is coming back online. Factories are coming back online. Stores also, restaurants, all that business is booming again. The stock market, of course, it tanked at the beginning of this week, but it is currently booming. And the dollar has also been responding positively to that boom. So now, if you understand what is happening in the business sector, industrial production, manufacturing and export sectors, which are very significant in other economies relative to others. For instance, in the US, well, manufacturing accounts for 10 to 15%. But in a country like Japan and Germany, okay, when you're trading the JPY, you're trading the euro, it will be very, very significant, even for the central bankers of those particular nations, to pay attention to the state of manufacturing, those nations. We all know Japan is a big exporter of vehicles, for instance. Every car right now in front of you, whether you're listening at this in a car or today you were on the road, it was a Toyota. Massive exporters, that is Japan. So any data to do with industrial production, manufacturing, will tend to have an impact on the currency. Now, the structural bit, okay? This structural kind of information. So we have the labor report, we have consumer health, and we have the business sector and the structural reports, economic data prints. So they paint a picture of the overall economic environment, and they form a basis for currency trends and tend to be important to medium-term and long-term traders, okay? Medium-term and long-term traders, pay attention to this, please. So what are these main structural indicators? Indicators to do with inflation, growth, and trade balance. So whether prices are rising or falling, that is inflation. How fast? And inflation indicators are important for anticipating the direction of interest rates. Markets affects market. The currency market is primarily driven by interest rates. Okay, you have to understand the interest rate narrative around a particular currency. Okay, and who are basically calling the shots, which obviously it's central bankers mostly. Okay, getting their cues, of course, from the market. Now, indicators to do with growth and growth of economic activity are important, essentially for measuring economic growth and expansion. Sorry about that. So they serve as a key input to monetary policy and interest rate outlook. So break things down, break the economic calendar down, try to pinpoint information to do with growth, you know, GDP, for instance, okay? And preliminary GDP, final GDP data prints, all that. Preliminary GDP data print being the market tends to react, you know, much more quicker to the preliminary GDP release. Trade balance. Of course, we are in the foreign exchange market. We trade currencies, you know, Euro USD currencies usually trade in pairs. So it's a relative relationship when you're looking at currencies. And since it's a relative relationship, these countries do trade with each other. So a country which is primarily an exporter of products, primarily that is the primary business, for instance, Japan, okay, they would want their currency to be cheaper, okay, so that their goods can be cheaper out there. And you know, demand for their goods demand for the products that come from that particular nation can be able to find a market. The goods will be able to find demand in the market, in the export-import market. So now, trade balance, obviously an indicator for evaluating export and import trade of a country, of a nation. So the other thing that you ought to pay attention to is fiscal balance. It is basically means the current revenue minus the current expenditure. Is it positive or negative? Positive, meaning a country has a lot of expenditures. Negative, meaning nation has a lot of expenditures. Positive, it has less. And there are some countries which have a surplus when it comes to the fiscal balance, like Germany, for instance. So the overall level of government borrowing and the market's perception of financial stability. Some countries have overborrowed, others have not overborrowed. others have, a plus in their books. So as a rule of thumb, countries with high debt levels run the risk of a weakening currency, obviously, and vice versa. And the US has a high debt level, but the dollar is a global reserve currency. Okay, so it's a global reserve currency. They can afford to print as much as they want. It will still be in demand. Okay, but for us, we cannot do that. Now, so you guys will get a copy of this presentation, and what I'll do now, especially for those guys who are beginners, okay, so I think we have a bunch of questions. Okay, so questions here. Some wants to know, how do you get the outlook, let's say, for the European Central Bank, since it is not provided in the economic calendar? That's a good question. How does structure relate to the fundamentals? Okay, I don't understand what Sam means by structure. But on the ECB, we're going to have a look at that. So, guys, if you want this particular presentation, I'll be able to send to you these notes. So let's go ahead and do something very, very quickly. Okay, especially for those guys who are beginners, and we see how we can be able to locate this data, economic data that we've been discussing about. You can do that straight from your platform. So this is what I'll need you to do, okay, in case this is your first time that you have attended this webinar. And you can simply go to Scope Markets website, okay, and open an account. So I've Googled Scope Markets, and all I can see is, let me see, where is the website? Can only see the Twitter page. It's okay, you can go to Twitter, make sure you follow Scope Markets. So let's have a go at this again. Scope Markets Kenya website. Or someone, so Scope Markets, so simply you go and Google. You can Google Scope Markets Kenya website, or just key in Scope Markets www.com. So Scope Markets Kenya. And remember, the reason why we are doing this is I want to show you guys how you can quickly be able to access. Why is it taking me to maps? Okay, I think I pressed yes, there we go. So thing is, once you land on the Scope Markets website, okay, you should be able to download a platform if you want to. If you're already a customer, you can, if you're already a Scope Markets partner, that is, you can log in. And when you look at the website, when it comes to opening an account, very easy steps. 4 steps: you register, verify, fund, and trade. Assuming now I want to get started with Scope Markets, okay, I can simply start the process of registration, or I can simply log in. I cannot be able to go and start registering because I am already a partner with Scope Markets. So first of all, you register, and then you have to verify. Your documents will have to be verified. So there are some documents you will need to provide upon registration. If you're a Kenyan, your typical national ID card will be required. Your KRA documents will also be required. And it's basically, guys, it's not for the purposes of tracking your tax records, whether you're paying taxes or not. It's not for that purpose, because that question usually keeps popping up. It is not. It is just one of the things that is required, since Scope Markets is a duly regulated broker. So anyway, you can jump to platforms very quickly, okay? And then when you jump to platforms, then you'll have an opportunity to register. And the platform that you can use is MetaTrader Mt5. And then quickly go there, register. I've told you guys I'm not going to be able to register because I already have an account. So you can register. You can see the process is very, very quick. Password, your country, you accept all the terms and conditions, and that you are over 18 years old. Now, you can choose your MetaTrader. After that, now, after you basically have registered, you should be able to download the MetaTrader Mt5 platform. Now, when you come to the website, the bottom part of the website, you'll be able to see what platform you can use depending, where you can download a platform that is compatible with your operating system. If you're using a Linux, Apple, Android, or Windows. So you can also be able to use Android and trade right off from the comfort of your mobile phone. So once you have downloaded, you will be able to install it, go through the installation process. And if you're having any challenges, you can feel free to call one of Scope Market's wonderful account managers, and they will be able to guide you through the process. Now, enough with that. Since I already have an account, let's go to the platform. Okay, that is the Mt5 platform. As you can see right in front of you guys, we have the Mt5 platform right there. And we are looking at various currencies here, being Euro USD, Pound USD, Dollar, Yen. Now, what I want us to do. Okay, now this even applies for those people who already are familiar with the trading platform. Okay, so what I want us to do, if you already have the platform, you can simply press Control T. So Control T, that is the terminal. You'll open up the terminal. So once you pop up the terminal, once the terminal is up, you will be able to have various multiple tabs down here: trade, exposure, history, news, mailbox, and calendar. So for today, we're not going to talk about these other ones. We are going to focus on calendar. Remember all those things that we discussed about, and I told you guys you can be able to access them. The data points, that is, from your trading platform. You don't have to go to any other outside source. All the data is here for you. And you can see this data is simply prioritized. Okay, so we have ones which have a high impact on forex exchange, on currency exchange rates, that is, of movements, wherever you want to put it. And you can decide all events carry the same degree of priority if you want to see all events. But the events that are paying attention to here, as you can see on my platform, I want to see the holidays and the high impact events. And I can also tick on the medium impact events too. Country also, you can select events for which countries that you want to track, and that will obviously depend on which currency pairs you are trading. Obviously, if you want to trade currency pairs for all these countries, they are available on the platform, including Mexico, Norway, Singapore, South Africa too, if you want to trade the South African rand. And if you want to track economic data releases, which will tend to make the South African rand sensitive, that is the exchange rate for the rand sensitive. You can also be able to highlight on the currencies whose, on the currencies which will be affected by various data releases. Let's say, for instance, your favorite currency pairs to trade. You primarily trade the euro and the sterling pound and the United States dollar. So you can be able to mark out your calendar in a way whereby you'll be able to simply see, you'll be able to simply track the economic data or events that will affect the volatility of those currency pairs, that is the euro, the USD, and the sterling pound. Or you can also be able to track all of them if you want to. Okay, so there is something that I want us to do here. Also, before I forget, you should be able to also see this data points or release or dates on your charts. Okay, for those guys who are familiar with using charts for trading, so you can be able to have them highlighted on your charts so that you can be able to track in terms of the day that the trade is being released or the time that is being released. So you can add all the events. If you want to track all the events, you can delete all the events also on your chart. So I think I have an option whereby I have highlighted on my charts some of these events. So you can see, for instance, on Monday, Tuesday, these were the events that were released on Monday. So on Monday, we had, for example, in New Zealand, we had the Business New Zealand Services Index. Remember, we talked about economic indicators which are basically concerned with what is happening in the business sector. Also on Monday, 1300 hours, that is 1 p.m. our time, we had the Bank of England Monetary Policy Committee members speaking. When some of these central bankers speak, that also tends to have an impact on the currency exchange rates. And on Tuesday, we had the yen, things to do with the yen. And you can see the yen is it's highly traded late at night. This was at 2:30, okay, late at night or early morning. And on Wednesday, we also had, you can see even Eid al-Adha was on the calendar. But this is in case you are trading the Indian rupee. It was important to understand that day would be quite an inactive day because India marks that day as a national holiday and it is there. You can even see on my suggestions here, I have ticked on holidays. I want to know days which the markets are not volatile or actively trading. That is why I must have the holidays also indicated so that you're not caught offside. Then we have Thursday, yesterday. Okay, and yesterday, you see earlier on, I was talking about the European Central Bank interest rate decision and the European Central Bank monetary policy statement, which was really, and you can see these reports, these events basically are high impact events. Okay, and view here. Sorry, yes, you can also get to view the economic calendar on this website, but we're not going to go there right now. So on Friday, today, these are all the data releases that the market is paying attention to, or they will tend to affect or have an impact on currency movements and currency exchange rates. And you can see the ones which will basically have a high impact and the ones which will have a low impact. For instance, 2 p.m. today, Sterling will have the consumer confidence report from the UK will come out at 2 p.m. You had this was at 2 a.m. I think. So we have again 9 here. 9, we had retail sales data coming out, and you can see the forecast was 0.4. And then the actual release was 0.5. So the actual release basically beat the forecast. So it is important to also interpret data in that particular format. These releases, what is the forecast? The forecast means basically what is the market expecting? And when the actual release comes out, has it beat the forecast? Okay. So forecasts basically are based on forecasts by economists and analysts, okay, who obviously are economists. So they have their models and they come up with a forecast. And sometimes the market beats these forecasts. But as I said, when it comes to data releases, it will depend. Not all of them will carry equal weight, okay? Even if when it comes to priority, you'll see some events have a high priority. But even if they have a high priority, the question is, are the setters of monetary policy paying attention to the labor market? Are they paying attention to the business sector? Or are they paying attention to export and imports and consumer health? What are they paying attention to? If they're not paying attention to consumer health, for instance, even if the event is marked as a high priority or high impact event, well, really, it won't have that much of an impact. So guys, very important to do your homework in order to be able to put things or frame things in that context. Okay, now, if you go to your calendar, to your chart, okay, this was, I'm going to go to the intraday chart very quickly. So that is the 15-minute intraday chart. We see whether we still have time. We still have time. Now, if you go to your chart here, so I'm going to remove everything. I'm going to clean up my chart. So I'll clean up my chart, all the things that I use, leave that one there. And now, this was yesterday, for instance. This was yesterday. This was yesterday's trading. From this broken line up to this broken line. This is today's trading. From this point up to currently where the currency is trading at right now. So if you look at yesterday's trading, for instance, you see we had a very sharp move here with a very sharp jump, then a very drastic sell-off. And if you look at that time when that was happening at around what time? That is 14:45. I want to increase the size here so that you guys can see clearly. So you can see here, right here, at 14:45, what did we have on the calendar here? And at 15:30, at 1700 hours. So here, for instance, you can see we had the ECB monetary policy press conference. Look at how price action behaved. You can see all that time, 5:30, all that time. So we had the press conference, we had the release of the monetary policy statement. The president of the European Central Bank gave her speech, that is Christine Lagarde. She gave her speech, and you can see how the market was simply reacting. So we had many opportunities here, and opportunities to enter a long trade here, run it for 54 pips, an opportunity to also enter a short trade here, run it down for around 63, ran up to 66, 67 pips, okay? So the value of the pip obviously will depend on the lot size that you are trading. And this is not to say that, when that release comes out, you do this, you do that. No, that is not what I am saying. If you want to learn more about trading strategy, make sure that you contact Sylvia Traders Lounge in order to understand which various trading strategies that you can use to trade these environments. And also, of course, you can access free education offered by Scope Markets through Scope Hub in order to understand the nuances of price action. So it's not just a matter of coming in, jumping. No, but at least you can anticipate. Okay, the goal here is to anticipate. So you have information, and that information is helping you anticipate. Then after that, you can overlay your strategy, see whether you'll go long or short, depending on the strategy that you're using to trade at that particular news event. Okay, major event. Okay, so here, for instance, on Thursday, this was Thursday. Then on Wednesday we had, I'm pointing out so that you can see. Okay, why is it? Yeah, we had the EIA refinery utilization rate change. Okay. Then we had someone would basically wonder what is that? Like what is that? So that is basically a report that is released by the what we would call the Energy Regulatory Commission in the US. Okay, on how basically whether oil is oversupplied, whether there is enough demand for oil out there in the market. And that kind of information tends to affect the US dollar. And you can see we are trading basically Euro USD. So it will, those reports by the Energy International Agency, or that body which is similar to our Energy Regulatory Commission here in Kenya, releasing data showing whether there is excessive supply of oil, that is finished or refined oil in the market, whether there is excessive supply, whether there is excessive demand, and all that. So then we had the what here. I need this thing to highlight so that you can see what we're talking about here. But anyway, we had various releases here. You can simply go back to our calendar and see. So on Wednesday, that is. So on Wednesday, we had, for the dollar, we had, you can see the EIA crude oil stocks change. That is what I was simply talking about. Then we have also the Cushing crude oil stocks change. So they're basically released by two reporting agencies. One is called Cushing, based in Cushing, Oklahoma. And the other one obviously is not Cushing. And then we had a news release for Canada, that is the new housing price index. You can clearly see that if you look at the Canadian dollar chart, Control M. And let's look at the dollar card. That's the dollar card. Same thing, same thing. You can see here we are. This is yesterday when yes, this is the day. That is on Wednesday. So the Canadian dollar, for instance, tends to be heavily affected by anything to do with oil. Okay, Canada is a major exporter of crude. And you can see how this pair reacted yesterday when that information was being released. This is price action, not yesterday, sorry, on Wednesday. Apologies about that. So you can see how it reacted when that data was being released. And so those were very good opportunities to participate in the market, given the volatility that was coming in when those releases were happening. Could either be a seller at this particular points, or a buyer here, or a seller here. And as I mentioned earlier, that will basically, be dictated by which trading strategy that you are deploying. Okay, so the broker has gone ahead, Mt5 Platform has gone ahead to even enable you to mark out days and time, where you can simply, mark out those days and moments of time during the day, where you can see, so that you can simply pay attention when these releases are coming out, in order to help you anticipate well and take advantage of the volatility that will prevail, okay, and make money at the end of the day. So that's it for this presentation. And as I've said, make sure you get that platform, MT4. Make sure you open that live account, Scope Markets, or a demo account, and so that you can be able to apply some of these insights that you have basically been exposed to in this webinar. And now I will, take questions. But there was a question on the ECB. And I wanted also you guys to have another source where you can be able to get those particular statements that we are talking about. Commonly used one, Forex Factory. Okay, so this was Forex Factory. This was, you can go www.forexfactory.com, check out the calendar. So for instance, yesterday on Thursday, when we had the European Central Bank presser, so this is the monetary policy statement right here. It was released at 7:45 a.m. I don't think this is a local time. And you can see when you come on and click on this folder here, there are so many commentaries on that report, but the source. I want us to go directly to where it is and actually get to download it. So for instance, you can go to the ECB website, the European Central Bank website, monetary policy decisions. Very quickly, go to the full story here, or you can go directly to the website, ecb.europa.eu. And well, this is the press release, okay? This is the press release. So traders will basically take their time and read this, okay, depending on the type of trader that you are, and read this in order to understand the fundamental, or what you would call the macro backdrop, okay? What, from the standpoint of macroeconomics, or from the standpoint of fundamentals, what kind of environment is the Euro USD in? What kind of what is the European Central Bank foreseeing in the future regarding interest rates, regarding growth? Okay, simply log into the site, get to read the press release of that particular statement that has been released. And you can see, for instance, they mentioned two things to do with inflation, keeping it at 2% target. Also, they'll mention the things which basically concern them. Okay, this, guys, it's a summary. I'm pretty sure you can have the full report and you will see all the economic indicators that they are putting, that they are considering. And you can see, obviously, one of them will be inflation. And all measures of inflation, for instance. Now, having said that, it's still the same even with the Federal Reserve, okay? For instance, we can look up the Federal Reserve. That is the Fed. You can go to the Fed directly to their website. Okay, this, if you are a beginner, if you're a newbie and you're trying to, and even if you are a seasoned, experienced trader, you're not much of a newbie, and then you're really trying to get a foothold on fundamentals, and particularly fundamental analysis. It's something that usually comes up. Technicals, it's pretty much straightforward. Really, it's easy. Technicals, it's easy. Way straightforward. But fundamentals is what basically turns off some people, or maybe someone thinks, well, this is just too complicated. Besides, I don't know nothing about economics. Worry not, as long as you have that framework we were discussing about in the webinar. So you can simply come here, and first thing, when it comes to setting up your framework, obviously you look for the statement. Okay, so come here, monetary policy. You can learn much more about the Federal Open Market Committee, which is the monetary policy setting board for the Federal Reserve Bank. So come here, monetary policy, and I think they have, they publish, not I think, they actually do. You can see reports, and you can have a monetary policy report right there. And you can see the current report, which was released on the 9th of July. Okay, run through it, have a read at it. Okay, then you will be able to see and to determine which economic indicators the central bankers are paying attention to. So when you are tracking your economic calendar, under the back of your head, okay, these guys who set up monetary policy and dictate and basically help in determining interest rates are paying attention to the labor market. Why? How did you know that? You read the report. Okay, so on that day, when the labor report is coming out, okay, because you have planned your trading, you have your calendar, you have the currency pair that you have been scoping out and that you're looking at, you have that. So on that day, okay, these guys have been paying attention to the labor market. Then on that day, which is usually the first week, for instance, if it is the labor market, the first week of the month is the non-farm payrolls. The Fed said you're paying attention to the non-farm payrolls. You want to trade dollar yen. For instance, the dollar versus Japanese yen, you have your strategy, technical, it is in place. You have your information to do with fundamentals in place. Check. Okay. And on that day, you will be able to now see and anticipate the kind of, okay, not predict, I'm not saying prediction, remember, just note my words, anticipate what the currency exchange rate will, how currency exchange rate will probably move and react. But what you know at the back of your head is you are expecting or anticipating an explosive move. Why are you anticipating or expecting an explosive move? Because the communication from the policy setters is that they are paying attention to that data report. And you're not the only one who is paying attention to it in the whole entire world. Big money, big movers, okay? The movers and shakers of the market are also paying attention to it, okay? So, yeah, there is a framework I've given you a trading plan. Go and try out, go read, go do the homework and see whether you'll be able to take advantage from an informed standpoint, okay? Because I told you guys, if you look at the typical calendar, let's go back to our platform very quickly. If you look at the typical calendar, okay? Every day there is something, there is always something, there is always a release. On Thursday, you can see Thursday we had a bunch of releases, okay? But which ones had the highest priority, okay? Besides from them having high priority, are they important to market participants? Because is it important to the central bankers? Okay, that's the other thing that you should check. If you have like a system of steps and you're checking this, checking that, when it comes to the report, check. Is it a very significant report? Check. It is a high priority report. Check. Is the central banker paying attention to it according to my homework, those monetary policy statements that I have read? No, they are not. So you can know very well, fine, the market will react, price will react, obviously, because it is a priority event, but the reaction might be, not so volatile. And so you won't be surprised, okay? Yes. So at least I believe I've given you guys, well, as I said, this is a subject we can talk about over and over and over again and hours and hours, but at least for now, run with that. Then give me the feedback. Tell me, okay, how it went. Tell me what you're paying attention to. Feel free to tell me, hey, I'm paying attention to this particular report. What do you think? Okay. And most importantly, what are the major players thinking? And we hash it out, we see, and we take advantage of the opportunities when they present themselves. So guys, thank you for your time. Thank you for attending this webinar, and I hope the question on ECB has been answered. I don't think there are any other questions. There are no other questions. So guys, also take your time to fill in I believe you have been sent a form. One of the panelists has sent you a form, and feel free to fill it. Your feedback is very, very important to us, so that you can know how we can improve on our webinars, and also what it is that you want specifically to have a grasp on. So thank you guys. Have a good one. Okay. There was another. There are other questions before I end this. So also, can a trader be, hello, how do you differentiate long-term fundamental news and short-term to help pick a bias in the market? So I mentioned this in the presentation. You have to look at the structural reports, inflation and growth, okay, monetary policy. Those ones determine that long-term backdrop, Or if, for example, you're looking at a currency pair and you're seeing a trend, you know, this trend, what is supporting this particular trend? Okay, so you look at the structurals. Okay, so, and I said I'm gonna send my notes, and you will have a look at you know, more explanation as to what those structurals mean. So also, can a trader be profitable in the long run or even short run? In the short, trading technical analysis and ignoring or not paying attention to the fundamentals. Not paying attention to the fundamentals. Now, can you cross a road? Let's say you're in Tao, okay? Can you cross the road without paying attention to the street lights, for instance? What will happen? Okay, so as I've said, it depends with how you pay attention to those fundamentals. Obviously, you can't pay attention to everything, but you will have to pay attention to some. You need to have a hybrid approach. Okay, you might be trading purely technically, but your approach, well, it won't hurt to make it a hybrid approach. Okay, yeah. So you might see, okay, you're looking at the calendar. These are the most pressing events or releases that are coming right up. It is important to have that information to know, even if you're trading technically, will I be stopped out on this trade? Will there be an unexplained price movement? I mean, currency exchange rate movement. So it is important to pay attention to the fundamentals, especially to be able to anticipate, well, as I had said earlier, to anticipate that volatility. You don't want it to knock you out. So guys, time is up. Feel free to reach out. The details for reaching out are on the chat section, and we can take this discussion even further. So have a good weekend, guys, and happy trading out there. Watch your risk, put your stop losses on, take your profits. Very important to take profits. Don't be greedy. Take your profits. Get paid. So cheers until next time, guys.